Hi, my name is Michael Blonsky, and I'm a managing partner with Vegas Home Advisor Real Estate Services. I wanted to take a few moments to take you through a short presentation that describes a very old concept in real estate investment, but it's a great way to acquire wealth. This concept is not quite as old as the ancient pyramids, but it will give you a sense of how you can start very carefully and slowly and build yourself a large pyramid of properties in not too many years. The key concept in this strategy is leverage. And if you think about leverage as being able to use other people's money to gain interest at a larger rate or get a larger rate of return sooner, you could compare an investment you might make in real estate to an investment you might make in the investment world. So if you spent $20,000 on stock and your stock grew 2% year over year, you'd be making 2% on your original investment compounded. On the other hand, if you put $20,000 into real estate, your investment would be a total of $100,000 and your 2% return would be based on that $100,000. You actually get the additional return, not the bank. Of course, you take the risk of taking on the loan, but if you've got good credit and you're willing to follow this strategy, it'll be well worth any kind of risk you take. The first step in the process is acquiring your first rental property. That's the key. Get started. And at Vegas Home Advisor, we work with investor clients and we advise them to only purchase properties in the $100,000 to $140,000 purchase price range. We do this for a number of reasons. One is that it's an inexpensive way to get started. It only takes about $25,000 to $33,000 in cash to get started. That includes about $5,000 for closing costs. The other thing is to avoid the common mistake that a lot of first-time investors do, and when they buy their first investment property, they tend to overbuy. They buy a property that they might want to live in one day, or they might want to sell to their kids or give to their kids one day, instead of buying a property that meets the very simple success requirements that we outline. And the most important part of the success criteria is that each home must cash flow. That means that the annual rent has to exceed the annual debt. You have to factor in things like vacancy and repairs, but we have strategies for minimizing those costs and for maximizing your success. Just looking at the numbers on a particular simple purchase of $100,000 with an $80,000 loan amount, you can expect rent in the range of about $950 a month. The mortgage payment on a 30-year fixed at 5.5% interest, which is a very conservative rate and a very conservative type of loan, would be about $454 a month. Taxes and insurance on top of that, just a little bit under $100. Property management fees, $95, leaving you with a monthly cash flow of about $304 a month. The annual net income, if you multiply that by 12 months, is $3,648. So there's a couple things you need to know about the numbers here. Sure, you can start with higher rents, and the challenge being is you want to start with a rent that makes sense for the property and for the neighborhood in question. And by makes sense, ideally you want something a little bit below market rates, because ultimately if people feel like they're getting a bargain, they're going to stay in the home for a long period of time. Another caveat here is with the loan. Of course, if you're going to follow our recipe for success, you're going to refinance this house very quickly within the first 2 or 3 years. So it doesn't make sense to get a 30-year fixed mortgage where you're paying a lot of the interest up front. You're better off getting a lower interest rate product like a 5/1 ARM or 7/1 ARM, whatever you qualify for, to get the lowest possible rate so you pay the least amount of interest in the period that you have the loan for, which is only a couple of years. Again, that will improve your cash flow and hopefully you'll exceed this annual net income target of $3,600 a year. Another key to success is to be sure that you save that annual net income towards your next home. Of course, if you need to take the income out, what that means is instead of being able to refinance in 2 or 3 years, it might take you 3 or 4 years or maybe 5 years, depending on how much cash you take out of the profits from the rental. So in order to go from one property to 2 properties, there is a first refinance is required. You'll refinance property 1, And again, timing will depend on market growth. Like we said, if you're saving the annual net profit from your rental and other things. If you decide you want to throw your tax returns for a year or two into this pool that you're using to purchase the next property, you can accelerate that. If you have unexpected expenses one year, you can decelerate that. It's completely in your control. And the other thing about this, of course, is that every property you purchase, the deed of trust will be in your name or in an LLC, a company that we've set up for you that's controlled by you or your heirs or your family members. Again, the goal here is to keep moving forward. So ideally between year 2 and year 3, you acquire your second rental property. The nice thing is at year 4, so 2 more years after you acquire your second property, you'll be able to refinance both property number 1 and property number 2. If you add in the annual net profits from the rentals, you'll be able to double your investment to 4 properties. And to me, 4 properties is sort of a magic number in a couple of ways, because at 4 units, once you have 4 rental units, the cash flow of $36.48 each, you'll have enough cash just from cash flow to purchase a new home every 17 or 18 months without doing any more refinances. So if you wanted to slow your growth, this is one strategy. You can start taking the cash flow and every 18 months just simply acquire a new property. And of course that accelerates because the more properties you add, the more income you have, and the sooner you get to the next point where you can have a down payment for another property. The other thing about the number 4 is that very often when people do this strategy on their own, this is where people kind of tap out. This is where it becomes too difficult to manage on their own. This is where maintenance and other things become a challenge. This is where taxes and accounting become a challenge. And this is another reason why we recommend that you leverage service like the ones that Vegas Home Advisor provides, not only to manage the properties, but also to manage the process of acquiring the homes, accounting for the homes, and ensuring that you're maximizing your benefit. Again, hopefully you'll get to the point where you have 4 properties and you'll continue pressing forward. And again, this starts to accelerate. So instead of every 2 years, it actually becomes a little bit less than every 2 years as the cash flow increases. So when you get to 8 properties, again, 2 years after acquiring your 4th property, you'll be invested in properties that are cash flowing pretty close to $30,000 a year. And that alone gives you 1 new property each year on cash flow. So again, if you decided you didn't want to keep refinancing and wanted to slow down, put the brakes on this, you're still able to buy a new home every year. So in 8 more years, you'll have 8 more homes. So this is another decision point that you get to make as the manager of this particular transaction. And we will advise you to do what's in your best interest, but you get to decide how you want to manage this. If you're done with the refinancing and you want to move forward, or if you think the market's going to change at certain points, you can change your strategy. And this continues to be a viable strategy if you want to just stop here at 8 properties. I think $30,000 a year is also an excellent supplemental income. This is a great way to add to either your retirement funds or your day job or whatever it is that you're using to currently live your life. This is a nice little bonus. This gets you a few vacations. This gets you whatever it is that you're looking for out of $30,000 extra a year. Let's not assume that you stop at 8 properties. Let's assume that you continue on the path that we recommend and you keep doubling down every 2 years. So 10 years after your first property, you'll be at 16 properties. Again, the nice thing about this is the cash flow. At this point, the cash flow will be $58,000 a year, which enables you to acquire 1 new property every 4 months on cash flow alone. Obviously, we can keep refinancing the existing properties, and we can start staggering those and changing the timings of those, and maybe moving some of the older properties into 30-year fixed mortgages or maybe even 20-year fixed mortgages, depending on how you want to pay these off. So again, the strategies can be reset and revisited every year. It's one of our most important events is to make sure that we're talking to you on a regular basis. So at least every quarter, we like to meet with you in person or on the phone. But we also send you statements on a monthly basis so you can see how your properties are doing. The next step, and this is the logical conclusion for at least this presentation, but of course not the stopping point if you want to continue, is to double 1 more time. So if you think about this, after putting just 20% down on your first home, 12 years after you've started, you're now up to 32 properties. And so this is where we talk about with our clients this concept of 20, 30, 40. So if you put 20% down on one property, you'll have 30 properties by the time you're 40, assuming that you start when you're 28 or so. So this is a great strategy because at this point, when you have 32 properties in your control, at the minimum, you'll be making a cash flow of $116,000 a year. So in most people's cases, that's a great income. That's actually enough for you maybe to switch jobs or go back to school or do something creative other than working for a living. This is a great way for you to start taking income out of the equation. Another nice thing to note is at this point, your net worth on properties alone, if you just figure in no growth, is about $3.2 million. So 32 properties at 100,000 each brings you up to a net worth in excess of $3.2 million. Again, assuming a 2% growth year over year, that number is going to be much higher. And another nice thing is that cash flow number, the $116,000 a year, that's your base pay. Every year as you start paying off each property, that base pay increases to the point where once you've paid off all properties in 20 or 30 years, suddenly you have a cash flow of $360,000 or more per year with no incremental cost other than basically covering the property taxes and maintenance for the properties. We, of course, love to quote Warren Buffett, and what he's famous for saying, our favorite holding period is forever. And while you can cash out at any point along the way, you can stop investing at any point along the way, ultimately this is a 20 or 30-year strategy. You'll be fully paid off with all your properties in 20 or 30 years. You'll be cash flowing at a significant level after 12 years, and you'll be able to retire and have the flexibility that we like to see, which is what happens when you have financial stability. Again, another Warren Buffett quote. The fact that once you have financial stability, you get to choose what you want to do as opposed to having to do some things like having to work, having to pay bills. This is something that's really nice that comes with the flexibility of having financial stability. Finally, we talked about this along the way. Some of the secret sauce is that this is not a part-time activity. We don't recommend that you quit your day job. Especially in the early years. This is a slow and steady process. It takes several years before you get to the point where there's any kind of income really being thrown off in this process. It's also a conservative process. This is something that takes time and patience to manage. If you want to hire us as a professional to manage your real estate portfolio, it encompasses multiple aspects. It encompasses the actual property management, encompasses a lot of accounting. It encompasses planning and purchasing and going out and scouting properties that will cash flow for you and making sure they fit within your investment portfolio. So some of the questions we answer for clients, and feel free to email us and contact us using the contact form on our website or emailing info@vegashomeadvisor.com. The questions are examples below. How do I get to year 4 and year 2? So we have strategies for helping you get to the point where you have those first 4 houses in a couple of years. How do we live off the income for life? Obviously, if you've got the ability to wait until you get to 32 properties, that's an easy question to answer. Another thing is, how do we pay for our child's education in cash? Unlike a 529 program where you're saving your tax dollars or post-tax dollars towards education, the goal of this is to accumulate enough cash that you could actually pay for your child's entire college education without having to take any loans, without having to take any kind of assistance at all to get your child's education paid for. The other thing, and of course we recommend this for families that are just starting out, even before you have kids, don't put that first $20,000 in a savings account for your kid. Put that first $20,000 in the first home for this housing pyramid that we're talking about here. Build your child's future by investing in one home. And literally that's all it takes, is invest in one home and keep your credit score solid and keep pushing the accelerator on the investment strategy. Another question we commonly get from people who are at or near retirement age is, once we're at the point where we've invested enough of this, how do we start selling off the properties while we're relaxing on a beach. We may be retired somewhere else. And again, that's another service we provide is we're the professionals that manage acquiring your real estate portfolio, but we also have the ability to sell them off in whatever makes the most sense for your portfolio. For the properties that are cash flowing, we keep them in your portfolio. For the properties that make more sense, we'll sell them off sooner. So this is another great service that we provide. Like I mentioned, feel free to contact us directly through the contact form on the website. You can reach Rick Bird, our broker, by emailing rick@vegashomeadvisor.com or calling the telephone number 702-941-0706. Or you can reach me, Michael Blonsky, by emailing michael@vegashomeadvisor.com. You can also telephone me directly at 702-941-0703. Thank you so much for your time. I hope you learned enough to tickle your interest and get you excited about moving forward. It doesn't take much to get started, so reach out and give us a call.